The economy here in Canada is crashing, and so today the Bank of Canada slashed its rates in a big way. Economic growth has crashed in Canada. For well over a year now, GDP, which is the measure of growth that we use, it has been low. And on a per person basis, it's actually been below zero. Now, recession is defined as 2 quarters in a row or 6 months where that GDP growth is below zero. So, as a whole, we're not there. But on an individual level, we kind of are. In the past year, the only thing keeping our GDP growth above zero has been the growing population. We've had record population growth. For this reason, and for more reasons, really, the Bank of Canada lowered its interest rate by 0.5% today. In the last 20 years, rate cuts of more than 0.25% have only happened when things are particularly bad. In 2008, the US subprime mortgage collapse, which led to a global recession. And then again in 2020 with the onset of COVID. Those are the only two examples in the last 20 years. Now, before I keep going, if you find that this type of information is helpful, don't forget to hit that like button and subscribe for more videos. And if you have any questions or thoughts, please drop them in the comments below. I'd love to hear from you, and I will reply to your comments. 6 weeks ago, the Bank of Canada forecasted that GDP growth would increase from 2.4% to 2.8% in the third quarter of this year. And now that forecast is revised to be actually a drop to 1.5%, and some in the market are calling for as low as 1.2%. It's actually pretty bad. And now the bank expects growth for the year as a whole to actually be as low as only 1.2%. That's a big drop from its forecast just 6 weeks ago. Surprises on the downside have led to this larger than normal rate cut today. Inflation in September, it fell to 1.6%. That's down from 2% in August and 2.5% in July. Inflation has been mostly trending downward since hitting a high mark in June of 2022 of 8.1% there at the top of the graph. The Bank of Canada's target is to keep inflation as close to 2% as possible. Now, the bank suggested reasons that the inflation's come down this low is because some items have actually lowered in price. Well, it doesn't feel that way. There is some data to suggest that's the case. The big one being fuel prices due to the global oil price being lower. So you probably have actually seen the price of gas lower at the pump over the last couple of months. Some consumer goods have seen some price drops, but mostly it's the large price increases that have slowed down. Things aren't really cheaper than they were a few years ago. Inflation's measured using the consumer price index. So if we look at the consumer price index, instead of just the inflation rate, what we see is from January of 2020, prices on that index have actually increased almost 18%. So inflation getting under control, it's not going to reverse those price increases. The goal of the Bank of Canada isn't to do that. It's to keep them stable and going forward with the hope that wage increases are going to catch up, which will allow for overall market stability. So no, we're not celebrating the return to 2020's prices. That's not what's happening, and macroeconomic theory actually doesn't want us to see that, even though on an individual level, because our wages haven't increased, we would certainly love to see that on an individual level. We have seen modest layoffs across the country. Private sector hiring is weak. And this sucks really for anybody who's laid off because it means that it's harder to find new work. And calling layoffs modest doesn't actually feel good for anybody that's impacted by them. But on the macro level, of course, it's better than massive, widespread layoffs. The unemployment rate is higher in Alberta than it's been in a long time. And it's difficult and it sucks. And I know that. House prices, they're expected to rise gradually. They've been kind of pretty steady and rising here in Alberta, especially in our major markets of both Calgary and in Edmonton. The major markets around the country, the big expensive ones in both Ontario and BC, they've actually seen some price decreases over the last couple of years. And because the housing market's projected to remain tight due to a lack of supply and the record immigration we've seen in the last few years, as that immigration level slows down with new government rules on that, we're still going to see a tight inventory of housing. So we're still going to likely see some housing increase even in the areas of the country where they've been decreasing. But the rate of that increase should be restrained slower because of affordability challenges, right? Housing is so expensive, even here in Alberta, but more so elsewhere. But like, it's still so expensive. And we know it's expensive to buy homes at these higher prices. And of course, the higher interest rates that we've seen in the last couple of years haven't helped at all. So some rate decrease will provide some relief to prospective buyers and to current homeowners with mortgage renewals coming up. We're glad to see these price decreases. We're not necessarily glad for the reasons behind them, but these price decreases are fantastic. Happy to see them. Anybody with a mortgage renewing, it's going to help you. Anybody looking to get into the housing market, it's going to help you. Please comment below, click through on the description to the website, reach out to me, to my team, and we're, of course, here and ready to help you out. Thank you.